Good afternoon. My name is Wisnefsky, and I'm here with my partner, Will Gracer. We are students at Pomberg High School in Connecticut, and today we are presenting our investment analysis on Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. Our recommendation is a strong buy, with a 12-month price target of $595, representing approximately 65% upside from the current price of $360. When analyzing the global technology infrastructure, one company emerges as indispensable: Taiwan Semiconductor Manufacturing Company. TSMC does not simply participate in the semiconductor industry, it dominates it. The company manufactures approximately 70% of the world's contract semiconductors and 90% of the most advanced chips globally. TSMC's clients include Apple, Nvidia, AMD, Qualcomm, and Broadcom, essentially every major technology firm designing cutting-edge processors. These companies depend on TSMC not because of preference, but because of no viable alternative exists at the technological frontier. TSMC operates as the world's largest pure-play semiconductor foundry. The business model is critical to understanding the company's competitive position. TSMC manufactures chips exclusively. It does not design or market its own semiconductor products. This distinguishes TSMC from vertically integrated competitors such as Intel or Samsung. This pure-play model creates a structural advantage. Because TSMC does not compete with its customers, it has established trust and secured long-term partnerships that vertically integrated competitors cannot replicate. Apple and Nvidia are unlikely to entrust their most sensitive intellectual property to manufacturers who also produce competing products. Now I'll hand it off to my partner for our investment thesis.
Our investment thesis rests on three fundamental pillars. First, the artificial intelligence revolution is generating unprecedented demand for advanced semiconductors. Major hyperscalers, including Amazon, Microsoft, Google, and Meta, have committed to deploying approximately $600 billion towards AI infrastructure through 2026. Semiconductors represent the largest component of this capital expenditure. The most advanced AI accelerators require TSMC's leading-edge process nodes and advanced packaging capabilities, particularly chip-on-wafer-on-substrate technology. This creates a structural bottleneck. No competitor currently possesses comparable capabilities at the required scale. High-performance computing, driven predominantly by AI applications, now represents 55 to 58% of TSMC's revenue, increasing from approximately 40% 2 years prior. As AI models increase in complexity and scale, the requirement for leading-edge semiconductor nodes intensifies. TSMC is positioned as the critical infrastructure provider for this technological transition.
The semiconductor foundry market has undergone significant consolidation, with TSMC commanding approximately 72% of market share. The economics of leading-edge semiconductor manufacturers create formidable barriers to entry. Each new process node generation requires capital investments of $15 to $20 billion and 3 to 4 years of research and development before achieving production readiness. TSMC achieved high-volume manufacturing of 3nm chips in 2023 and commenced mass production of 2nm chips in Q4 of 2025. By comparison, Samsung is targeting 2nm production in 2027, and Intel remains years behind.
TSMC is currently executing a comprehensive geographic diversification strategy while maintaining its technological advantage. The company has committed over $165 billion to manufacturing facilities in Arizona, with Apple, Nvidia, Qualcomm, and AMD as anchor customers. Additional fabrication facilities are under development in Japan and Germany, with advanced node production scheduled to commence within the next 2 years. This expansion serves multiple strategic objectives. First, it addresses geopolitical concentration risk by distributing manufacturing capacity across multiple jurisdictions. Second, it reinforces TSMC's position as the global manufacturing standard before competitors can close the technological gap. Third, it secures long-term customer relationships by providing geographic optionality for supply chain planning. Crucially, Taiwan will remain TSMC's center for innovation and high-volume manufacturing of leading-edge chips.
Despite its dominant market position and superior fundamentals, TSMC trades at a valuation discount relative to the broader semiconductor industry. The company's EV to EBITDA ratio is approximately 25x below the semiconductor industry average of 35. This discount appears attributable primarily to geopolitical risk premium rather than fundamental weakness.
Our valuation framework imposes a discounted cash flow model methodology with 3 scenarios: a bull case, a base case, and a bear case. In the bull case, assuming TSMC maintains its current quarterly earnings growth rate of approximately 40%, the conservative valuation yields $752 per share. In the bear case, assuming earnings growth decelerates to 20%, the conservative valuation still yields $467 per share, still representing 30% upside from current levels. Our base case assumes 30% annual earnings growth. Applying TSMC's current PE ratio yields a present value of $594 per share. This represents our official price target and forms the basis of our strong buy recommendation. TSMC demonstrates exceptional financial strength across multiple metrics. The company maintains a debt-to-equity ratio of 18% compared to the industry average of 45%, and holds an S&P bond rating of AA-. Cash reserves remain at $92 billion, providing substantial flexibility for capital expenditure and strategic investments. The current ratio of 2.62 indicates strong liquidity. Profitability metrics are equally robust. Return on equity stands at 35%. Return on assets, 17%, both significantly exceeding the industry averages. Gross margin is approximately 60% compared to an industry average of 37%. Operating margin at 51% compared to an industry average of 16%. These margins reflect not merely scale advantages but genuine pricing power. TSMC's technological leadership and customer dependency enabled the company to capture value commensurate with its strategic importance. Revenue growth of 20.5% year over year significantly exceeds that of competitors.
No investment thesis is complete without addressing material risks. The two most significant risks to TSMC are geopolitical tensions surrounding Taiwan and the possibility of an AI infrastructure spending slowdown. Regarding geopolitical risk first, approximately 90% of the world's most advanced semiconductors are manufactured in Taiwan, creating a single point of failure for the global technological supply chain. Escalating tensions between China and Taiwan represent a material risk to operations. However, the concept of the Silicon Shield suggests that TSMC's global economic importance provides Taiwan with a strategic position. Both the United States and Russia have strong incentives to prevent disruption of semiconductor supply chains. Regarding AI spending risk, if artificial intelligence infrastructure investment moderates substantially, TSMC would experience reduced demand for its highest margin products. However, unlike speculative technology bubbles, historically, current AI investment is driven by highly profitable companies with strong balance sheets and cash flows. Microsoft, Amazon, Google, Meta, and Apple view AI infrastructure as essential to competitive positioning. We assess both risks as material but manageable and believe they are adequately reflected in our current valuation.
3 near-term catalysts support our investment thesis. First, continued expansion of AI infrastructure spending. As models increase in parameter count and complexity, advanced nodes become increasingly essential for power efficiency and performance. TSMC's technology roadmap directly addresses these requirements. Second, the commencement of production at international fabrication facilities. The Arizona fabs are scheduled to begin volume production within the next 12 to 18 months, validating TSMC's global expansion strategy and reducing geopolitical risk perception. Third, capacity constraints in advanced packaging. TSMC's CoWoS technology remains supply constrained relative to demand, providing the company with significant pricing power for AI-related chips.
TSMC has demonstrated strong commitment to environmental, social, and governance principles. In April 2025, the company formally joined the Science-Based Targets Initiative, committing to independently verified emissions reduction targets aligned with limiting global warming to 1.5 degrees Celsius. TSMC has established a comprehensive net zero roadmap targeting carbon neutrality by 2050. The company maintains strong labor practices and operates TSMC University, providing comprehensive STEM education to employees. Corporate governance structures include independent board directors and an ESG steering committee reporting directly to the board.
TSMC's leadership demonstrates exceptional depth and experience. Dr. C.C. Wei, the Chief Executive Officer, holds a PhD in electrical engineering from Yale University and has over 3 decades of semiconductor experience. Wendell Huang serves as the Chief Financial Officer, bringing over 30 years of financial experience. Since joining TSMC, he has successfully executed multiple strategic acquisitions and managed a series of bond offerings that have strengthened the company's capital structure while maintaining conservative leverage ratios.
Taiwan Semiconductor Manufacturing Company represents a compelling investment opportunity at the intersection of dominant market position, structural growth drivers, and attractive valuation. The company has established an essentially irreplaceable position in global technological infrastructure. Our recommendation, again, is a strong buy with a 12-month price of $595. The AI revolution needs semiconductors. Semiconductors need TSMC. There is no alternative. Thank you for your time.